Hello and welcome back. Let's welcome in the management at Yes Bank now. Prashant Kumar is now with us. The numbers came out over the weekend. So, how would you evaluate this quarter for Yes Bank considering whatever the bank has gone through since 2018?
So quarter has been extremely good in the sense like we have been able to build up our liability franchise while continuously reducing the cost of the deposit. And first time our cost of deposit has come down below 5%. This is at 4.9%. There has been a growth on the CASA deposit by almost 47%. And our CASA ratio has improved to now 30%. Along with this improvement on the liability franchise, we are also seeing a very good growth on the loan side. So on the retail, we have disbursed almost more than 9,000 crores. And similarly on the MSME, another 4,500. And on the corporate also, we have disbursed almost 4,500. So overall 18,000 crores of disbursement on the loan has been extremely good. And along with both on the business side, we have been able to make the good recoveries, both in terms of cash recovery as well as upgradation. And the best part is that our slippage has come down by 50%. So slippage during the current quarter is something around 900 plus as compared to 1,800 crores last quarter. So overall quarter has been extremely good in terms of both business growth as well as better recoveries and the control on the slippage.
Right. So, how would you look at the non-interest income and NII? Both have fallen on a YoY basis. What is your assessment?
So on the net interest income, actually, these are not comparable because if you recall, last year, because of the order from Honorable Supreme Court, the entire NPA pool was recognized only in the fourth quarter. So till the third quarter, we were booking interest income on the entire thing. And in the fourth quarter, there was a slippage of 12,000 crores, which was actually spanning across the year, entire year. But it was booked only in the fourth quarter. So I think when we would end the financial year, then the whole FY22 would be comparable with the FY21. So the current figure of quarter 3 is actually not comparable. On the non-interest income, so last year we had a treasury gain of around 450 crores, which is definitely not there in the interest rate rising scenario. If you take that part out, there has been a growth on the non-interest income. So I think on the both NII and the non-interest income, we are seeing a good traction. And when the year would end, then there would be comparable figures on the net interest income.
Sure, that point is taken, but let me talk to you about the net interest margin as well, because over the last 4 quarters, we have seen a trend of improvement from the levels of 1.6 to 2.4. Where do you see this headed? Is it going to go back to the levels of over 3%?
So I think absolutely this is exactly like we were stabilizing the bank over a period of time. And after taking care of the legacy issues, now we are in the growth phase. And that is exactly what we are seeing. There is a continuous improvement on the NIM. So this quarter, there was an improvement of 25 basis points. And this momentum we would continue to see in future also. So we are expecting that the year end would be something around 2.65 kind of thing. But next year, our NIMs would be, say, 3% plus on the trajectory. And similarly, like if you see the other ratios, also they are continuously improving. So I think bank is absolutely has taken care of the legacy issues. We are on the growth phase, and this is a journey now where we would be continuously improving all our performance parameters.
Okay, so 2.65 on the NIMs by the year end and over 3% in the coming year. But what about your asset quality? Because this quarter, the GNPAs, the provisioning, slippages have all improved. What's the trajectory going forward as far as asset quality is concerned?
So we would be like, if you see, there has been a recovery of, say, more than 5,000 crores in the last financial year. And this year also, we would be seeing the similar kind of recoveries. But at the same time, we are also in the process of setting up of a ARC, and we are proposing to transfer the entire NPA pool in one of the ARCs. So I think the moment that would happen in FY23, bank would be almost at a nil NPA.
How would you evaluate growth on both sides of balance sheet for Yes Bank? How is the granularization coming in along for you?
So on the deposit side, we are seeing a growth of say around 25% plus, and this momentum would continue during the current quarter, and with higher focus on the CASA deposit and especially on the current account. We are seeing a very good traction, which would also help us in reducing our cost of deposit and expanding the NIMs. On the loan side, retail, we are growing at 25% plus. That would continue. On the MSME, we are seeing a growth of around say 12% so far. So we would be expecting the year end around 15%. On the mid-market segment, we have seen a growth of 40%, and this momentum would continue. On the large corporate, so far we have seen a reduction, negative growth of around 15%. We are expecting this now to stabilize in the current quarter. Overall, we would be in a position to grow around 10% on YoY basis by this year end. On the granularity, if you see in terms of the proportion of our retail and MSME has now gone to 57%. So when we started the journey, it was only 44% in March 2020. Now it has gone to 57%. And also in the corporate, our focus is on the mid-market, and on the large corporate, we are continuously doing the debulking. So I think with this strategy, the granularization on the loan as well as on the deposit is something which is seeing a very good progress. In fact, even on the deposit, the contribution on the retail deposit has gone up to now 61%.
Okay, that point is taken, but we can't let you go without asking you your expectations from the Union Budget 2020. What are you expecting for the financial services sector and the economy as a whole?
I think last 2 years, when there was the impact of COVID, government has done a fabulous job in terms of supporting the entire economy. Both government and Reserve Bank of India, through their fiscal and monetary policies, have been supporting the economy and also seeing the very good growth. I think going forward, the most important part would be that we need to boost the demand. And this demand can happen like if we continue to support the MSME. So I think the kind of support which government has provided during last 2 years for MSME needs to be continued for at least 1 more year. Second, we also need to support some of those sectors, especially I would be saying the construction and the real estate. Because the construction and real estate, not only it creates more job, I think a lot of say employment comes both for urban as well as from the rural sector on this side. And this is also one area where the government would also get very good revenues. So I think this is one sector, along with the MSME, if they continue to get the support from the government for at least 1 more year, that would be very good. And similarly for the individuals, I think this is the time if the government can put some more money in the hand of individuals by reducing the individual income tax. So I think with these kind of support, I think the budget, we would be expecting that government would continue to support at least for one.
Okay, Mr. Kumar, thank you so much for that. We will let you go on that note.